is the asset overview. What we can say is that Al-Aqar is actually a pure play healthcare REIT that focuses on healthcare related assets, consistently mostly hospitals with long-term 15 years lease arrangements. It is actually supported by its sponsor, the largest hospital operator in Malaysia, which is KPJ Group. Therefore, we can actually view Al-Aqar as predominantly owning KPJ hospitals. As to date, Al-Aqar has a total of 23 assets, of which 17 of them are hospitals, 3 wellness centers, and 2 healthcare colleges. They also have 1 aged care facility in Brisbane, Australia. And all of these assets have actually 100% occupancy rate and a total asset value of about 1.53 billion ringgit as of FY 2020. Earnings-wise, historically, close to about 80% of the earnings are actually contributed by the KPJ hospitals. The weighted average lease expiry, in total, the expiry lease that is available for the group, if you can see at the bottom left, is about 12.72 years, which shows the testament of how long these lease arrangements that Al-Aqar has. In terms of dividend-wise, Al-Aqar actually has been paying 7.7 cents for the last 5 years pre-COVID-19, even though you can see here is for FY 2020, they've paid about 6.81 cents. But with the recovery and the pent-up demand in hospital treatments after the MCO, we are fairly confident Al-Aqar should be able to go back to its previous 7.7 cents and even higher based on their future acquisitions, which we will be sharing more later. Maybe we can go to slide number 5. Okay, thanks, Rondi. Basically, this slide shows the Malaysian asset overview. It's Malaysian assets, which consists of the hospitals, colleges, and wellness centers, all have long-term lease arrangements of up to 15 years with an option to renew another 15 years at a current rental rate of about 7.1% to the market value. The rental rate, if you can see on the left, top left side, will be actually based on the asset, which will be revalued every 3 years. And it comes with a guarantee increase in rental rate of about 2% per annum. It just basically shows that the Malaysian's assets expiry profile, of which KPJ Group will be renewing all of these assets, therefore providing a defensive, sustainable, and even stable income for Al-Aqar, which shows why they can actually pay a very steady dividend for the last 5 years pre-COVID-19 of about 7.7 cents. Slide number 6. Okay, this slide is, I just want to touch a little bit on their Australian assets. The aged care and retirement village in Brisbane, Australia. It basically has a lease arrangement of 99 years at a current rental rate of about 8.5% to the market value. Why the long-term lease of 99 years? Just to share a little bit, it is actually a common practice in Australia. And I also understand based on some research that it could also go all the way up to close to 200 years. Currently, this asset in Australia is contributing about close to only 10% of the group's net property income. However, one thing I want to share, if the outlook of the aged care industry is actually a little bit subdued, this part I will probably let Encik Wan explain a little bit after the presentation slide. But one thing I also want to share is that since FY 2018, it's not a hidden secret that Al-Aqar and KPJ actually have the intention to dispose the aged care and retirement village due to the current outlook and also knowing already having achieved the technical know-hows in running the aged care, which will be very beneficial for them in the event they want to move into this sector in Malaysia. Next slide. So slide number 7. So slide number 7 is basically a the COVID-19 impact, showing the impact on Al-Aqar, which basically we just wanted to share with you guys the impact towards KPJ's performance and the reason for the drop in their dividend in FY 2020. As you can see in the middle, in April 20, the operational matrix actually decreased since the MCO in March last year. Therefore, basically the operational matrix will be things like the patients, the number of surgical, occupancy rate, and therefore, because of the MCO, KPJ has actually requested for a rebate. I think one thing I would like to share that this was actually a norm, as the majority of the REITs across most sectors also actually provided rebates in FY 2020. We have also done some fact findings. In general, for REITs, back then there was actually an average drop of about in their net property income of about 25% quarter to quarter. But as to date, the KPJ operational matrix have since recovered to the pre-COVID-19 levels, and no further rental support was actually given since August last year, which is very good. Therefore, we are fairly confident that Al-Aqar will be able to return to its dividend levels of about 7.7 cents and even higher with the future expansion plans.
Maybe I can support Freddie by giving somewhat of a background to the reasons why the performance of the KPJ Hospital suffered. When we had the MCO1, at that time when COVID-19 first started, things about COVID-19 were not really known in terms of transmission, in terms of how the level of transmission was in terms of so a lot of the patients were not willing to go to the hospitals because they perceive the hospitals as somewhat very high risk. And in fact, a lot of the doctors, surgeons actually has actually postponed any non-essential surgeries. So that's the reason why you can see the substantial drop during the MCO1, particularly during March and April. But subsequent to that, I think by June, the impact of COVID-19 was quite well known. Even if you see the MCO2, the impact on the BOR of bed occupancy rates of KPJ has not been as bad as MCO1. So we believe that we needed to support our partner KPJ during this awful times in terms of the MCO1. But post August, we have not provided any rental rebates to them, and we don't expect there'll be any for this year as well. Okay, sorry, Freddie.
No problem. Thanks, Encik Wan. So just to also add on to Encik Wan's statement that there's no further rebate since August versus a lot of other REITs, I think this is actually very good, and it basically showcases how stable and defensive Al-Aqar can be. Okay, slide number 8.